Hello, everyone, and let me welcome Mr. Rajat Goel, who is co-founder of EyeQ chain of hospitals. EyeQ is a chain of hospitals in tier 2, tier 3 cities. Rajat and Ajay co-founded this company in 2007. And if I'm not mistaken, by the year 2018, they had 47 hospitals. But recently I checked the data that by 2023, they have 32 hospitals. So they have closed down certain units, which we will inquire why that happened, Rajat. But thank you so much for giving us time today. And our audience is eager to hear you, your story, your challenges, and especially your challenges related to scalability. Because when I interacted with you, I realized that you are one of those few entrepreneurs in this kind of business who believed in scalability from the very first day, who wanted to scale up from the very first day, rather than saying that one hospital, let me increase the footfall here. Your entire idea was, I have to open multiple hospitals. So I would like to first welcome you once again and then get into that. What were these growth dilemmas, scalability dilemmas, what kind of decisions you take? So over to you, Rajat. Anything you would like to share about EyeQ before we get into the growth dilemmas?
Thank you, Professor Chitra. Please don't grill me like the way I was grilled in the class when I was in PGP. So please don't grill me that. But I am happy to share my experiences. Most of it will be talking about failures than successes. I think successes were very few and failures are more. So since the audience are young entrepreneurs, I think it's important to talk about where we failed and what we learned out of it. I think I'll specially focus on those, and
Yeah,
let's see
please.
where we go from here.
Yes. So my first question to you is, when an entrepreneur thinks of scalability, scalability both in terms of, setting up new capacity, increasing sales, in your case, multiple hospitals at one go, what kind of dilemmas, decision dilemmas you faced, and what were the trade-offs, and how did you decide that, okay, I'll go in this direction, not in this direction? And were there, conflicts which you had to overcome? Were there anxieties which kept you worried throughout when you were planning all this? Any light on that?
So I think entrepreneur is a person who's very excited about what he's doing. I think he's very passionate, and he's trying to solve a problem which was not solved earlier, or trying to solve it in a way which will be far more efficient. So I think in a way, entrepreneur is trying to chart a path which was not treaded earlier, and hence it has got high probability of failure than success. And that's why it's whatever it's hallowed, or and it's wherever it is. So I think fundamentally any entrepreneur has to take decision on capital raise, capital deployment. Then the third is about manpower, and fourth is risk mitigation. Because I think the common folklore says that entrepreneur is a very high risk guy, whereas I think what I've seen is entrepreneurs are the people who are very risk averse. But however, wherever they take risks, very measured risk, but still the failure rate is high, primarily because the road is uncharted. So therefore, what I would say is whenever there are dilemma in terms of structure, there are four things. One is capital raise, the second is capital deployment, third is who will run that ship for you, and the fourth is how will you mitigate risk and ensure compliances happen. So that's where the structure is. Now coming to the second point, EyeQ, I think since we were trying to create world-class eye care at affordable price in smaller cities in North, which was very under-penetrated when we started. The key dilemma was where to start. First of all, where will we find the market? Then the second one was, what is the right model of pricing? Then the third was, how will we get manpower to that places? And fourth is, how will we run that ship in a very tight way so that we can deliver sustained quality? So that was our initial model. And then from there on, it was about how to scale the company from there on. And all the four things that I talked about were the key dilemmas that we faced every time while we were
But I
growing.
would like to stop you here, Rajat, just to intervene. That when you say capital, basically you're saying equity or debt, right? Or what combination of that, right? Okay.
Yeah.
What was your preference and why you had that preference?
So initially we started by saying that let's raise equity, and I think the normal favored route is to take equity from friends and family, primarily because nobody else believes in you when you start. Now, 2007, not even your family believed in you when you started. So therefore, you have to get money from people who genuinely thought that this is a great idea, and they had that kind of extra capital that they could give it to you. So that's the normal preferred route when you start. I think it still remains the preferred route, but now today you get seed capital from venture as well, and or there are angel investors who do it professionally. In our time, it was primarily friends and family. You also try and get some debt. At that point in time, when we started, debt was easily available at very reasonable rates with not much collaterals. However, as we went by around 2008, when the financial crisis came, all that, after that, it was very difficult to get debt. So one had to primarily focus on raising money from friends and family at that point in time, or look for venture fund.
But if financial crisis hadn't happened, you would have preferred debt over equity?
Uh, See, I think it's a classical dilemma. Why do you take debt versus equities? Primarily that you don't want to dilute. However, equity debt is very risky, primarily because you have to, finance the debt every month. You have to give debt, principal as well as interest. And when there is no profitability, you are actually using your equity to pay out debt. But this is the classic dilemma that every entrepreneur faces: how much equity to dilute at every point in time, primarily because in a venture, if you scale up the venture, you will go to Series D or Series E. By that time, how much food equity will left with you? So that's, I think, a dilemma, and you can trade either ways. And there are risks on both sides when you do it. So I think it's a question of where each one feels comfortable
Okay.
and what they think will be the next level of valuation that you get. So I think in our case, we took some debt primarily because we had equipments that we wanted to finance, and rest was done through equity, which was through friends and family.
And how about today? Even today, the preferred capital is equity capital rather than debt.
Today, after burning so much of my own, let's say emotions, etc., I would prefer not to have debt on my books.
Oh, okay.
Primarily because we are a profit-making company now. We are generating our own cash. We will take some debt, but that debt will be very, very less, so that we don't put when you have debt. I think the company goes into tremendous amount of issues when you are not able to service debts, which happen frequently in an organization. You would have seen a lot of cases now as well, which have got
Recently, we
issues
have
primarily because of, yeah.
yeah,
So I think it's a question of having although classical theory says that cost of capital is good when you take debt, primarily because equity is at 25% IRR and debt is at 10% IRR, but doesn't play in life like that. So I think it's a question of hedging your bets when you are doing a risky venture like entrepreneurship.
Okay, okay. And if I remember correctly, Rajat, like you said, there was also a dilemma related to, who will run the ship, that who are these people I need to hire. And if I'm not mistaken, you had hired at very early phase, I think in 2007-8 itself, CHRO, Chief HR Officers, Chief Technology Officer, Chief Financial Officers. And if I'm not mistaken, all these were IM grads, which is an expensive proposition for a startup like yours. And it's not that you had raised a lot of equity because you hadn't gone through a formal route of equity, right? And my understanding is entrepreneurs look at it like an expense. They don't want to hire expensive talent, and they don't want to, and they prefer to do a lot of things on their own in initial 3-4 years. So how come you decided on taking these decisions? When I say you, I mean to say you and other people.
So I think fortunately, after working in industry for a long time, I had a lot of friends. So they were working. It was not complete 100% because in a small startup, you don't require full-time people. You require fractional, time of theirs. So so therefore people are today available who are at that point in time also they were available, but now they are available in abundance, who are willing to share some time with you. But that particular time, even if they give you 2 hours, that is far more valuable than a small resource doing it for 24 hours by 7 into 365. Also, the key point is that if you are looking at a scale organization, it works on four basic processes. So one is procure to pay, the second is order to cash, the third is HR life cycle, fourth is patient retention and acquisition, client acquisition, and fifth is compliances. So I think it's very important to get people who understand these processes very well, because if you get this right, then chances of success of any organization is high. Because all organizations
feel that your experience with Bosch, you were with Bosch and Lomb for many years, and you were practically running for the CEO position there. I think that experience has really helped you in looking at a bigger scale from the beginning. Can I say that?
So when you work in a multinational, it also comes with a lot of baggage. So I would say on one side, it gives you experience. On the other side, it gives you baggage as an entrepreneur. So I would say
What
it is
kind
yes
of
or no.
package?
A baggage is that you work with the best of the talent there, and when you become an entrepreneur, you with the capital that you have, you don't get to see even the let's say 60-70% people percentage people. You actually initially you get 55-60% of quality that you expect. So therefore quality is here where your expectation is here. So therefore there is always a mismatch between what you want them to deliver and what they deliver. And also at senior level, you speak a language which is around 70-80,000 feet, and expect middle management to decipher it at 40, and then somebody else to execute at zero level. Whereas in an entrepreneurship, if you speak a language which is 80,000 feet and there is no one to decipher it, it goes flat and then nothing happens. I think that is what I learned over a period of 2 years. But yes, when you see a company which is legally compliant, which is very good, and then you understand these processes very well, primarily because you sit through all the meetings. It comes into you as conditioning, and it is ingrained into you that these processes have to run better if you want chances of company survival becomes higher.
Uh, from where did you get this courage कि 4-5 hospitals एक साथ खोल देते हैं and thinking of कि मेरे को 100 hospitals खोलने हैं in next 10-12 years, क्योंकि whatever said and done, these are capital intensive businesses, right? And you had a co-founder who was a doctor himself and who had only 1 or 2 clinic over, I think, his own experience of 20 odd years in the industry. मतलब कैसे आपने सोचा कि नहीं भाई एक हॉस्पिटल पहले सेटअप नहीं करना, पहले एक में फुटफॉल बढ़ाना, ऐसा नहीं करना है, हमें तो 4-5 हॉस्पिटल्स इकट्ठे खोलने हैं, and then we will see how it works.
So first of all, thanks to teachers. Teachers is a whiskey that we both of us sat together and decided on. So therefore, thanks to that. But I think it's a question of see, all entrepreneurs are at the end of it a little mad. So therefore, whatever they think, you are not able to decipher what happens. So therefore, if it is, it is. I don't know why it came and where it came from. There's no structure to it, but it was that if we have to create an impact. So it was a question of doing a job which was very good or creating an impact. If you want to create an impact, then you need to create an impact. So if you want to create an impact, then you will, over a, let's say, lifetime of 15 years, if you decide to create an impact, it has to be significant that you can look back and say comfortable. So when I was looking at, I realized that EyeQ has treated 75 lakh patients, done 6 lakh surgeries, trained 5,000 people. And when we started at that point in time, world-class eye care was not available anywhere in the country apart from big cities. So if you were in North, either you going to go to PGI Chandigarh, or you can come to Delhi, or 1 or 2 places where you will get good eye care. Today, with 4 companies, big companies, and one big company that went bust, I think that was a leader and pioneer, Vasana. I think between the 4 or 5 and capital from venture capital, I think even if you go to smallest places in the country, you will find world-class eye care at affordable price in the country.
Okay.
So I think it's a question of, so what does an entrepreneur has? An entrepreneur has a very strong vision, a set of values, and a set of passion. So I think So if you say, where did you get this vision that you will have to create 100 hospitals? I think it was primarily to create an impact. Otherwise, I was very good being a CEO of a company and making a lot of money and enjoying life. So
Yeah.
either you create impact or you have fun.
Okay. Okay. So, was there a time when you felt ki panga le liya, I should not have done this. This is too difficult to do, and I should quit. Did you have certain moments of that sort, certain experience of that sort during your entrepreneurial journey when things were just not working out?
Never,
Never.
never.
No, that's interesting to know. But I do remember that your business model got pivoted,
Yes. So
right?
I never thought that it will not work. When something was not working, it was not working. But I never thought that this will not work, primarily because if in lives we have made so many things work, why would it not work when there is demand? See, in eye care, there is always demand. It's a question of whether you are able to provide right supply at right price with the right trust to people or not. So I think it's a question of pivoting in these three places, whether the price is right, whether the quality is right, whether the trust that you built is right with the community or not. So that's where we kind of were pivoting ourselves to create or are we working in a place which is hyper competitive where we are not needed at all? People are satisfied with current status. So I think it was a question of trying to figure out this, and you pivot. See, life is, everybody wants to have comfort in life. So therefore, entrepreneurship is two steps forward and one step back, and everybody is comfortable with it because at least you are working one step. When it happens that you are taking one step forward and three step back, that is the time when your ass is on fire, and then you pivot. Primarily because otherwise you will go back and you will go to -0. So that's the time when you actually look at yourself hard and see where you are going wrong. Otherwise, life is comfortable.
Yeah, and
You
also I've seen entrepreneurs do get sometimes stuck with the idea they have been pursuing, and they feel that this is the only way to do it. But I like the fact that you said that, when you are taking one step forward and coming three steps back, this is a good enough indicator for you that maybe you need to pivot. Maybe market is requiring something else that you are giving, right? And it's better to adapt to that.
So it's see, with entrepreneurship, if you are successful, if you raise one or two rounds, you suddenly start becoming, you start coming in the newspaper, people start calling you to conventions. You suddenly realize that you become rock star, whereas your ship is burning. So it's, I think, hubris, where you have spoken about it so many times that you are convinced that the model will work, whereas it is not working and your ship is on fire. But I think since your market position becomes such, so it's very difficult for you to come out of that market position. So
Oh,
that, or you have promised something to your investors as a valuation metrics, and then you suddenly realize that's not working out, but you have to face those people who have given money on that. So how do you go back to them and tell them, look, you've given money to us, but it's not working out, so I'm moving out of this and doing this. So there are entrepreneurs who have courage, who do this, they become successful. The entrepreneurs who don't have courage, then they finally fold up.
Very interesting to know that. So, when you talk about investors can also put pressure, or I, as an entrepreneur, have overpromised, to investors. How much pressure comes from investors, rather, in reality, or investors are also adaptable because ultimately they want to make more money, right? If the entrepreneur feels it is not working, won't they be comfortable that, okay, fine, adapt and see what works? Or investors' own belief also starts putting pressure on the entrepreneur.
So first of all, I think no entrepreneur in the right mind gives over projected target. It's again the same thing that, whatever pans out will be 50% of what you do, what you deliver. And each investor also factors in. I don't know how much they factor in, but investors are becoming smart, so they are factoring in this primarily because they would have seen so many deals, so therefore they would also factor in. So I think somewhere there is consensus on what will play out. So it's not a question of whether, and see, investors are also all kinds. So what is their objective? That they want to protect their capital, right? And they want to protect their whatever they have, and they have fiduciary responsibility towards. So I think it's a question of and board meetings happen. It's a question of your conviction and art of negotiation. I think everything is negotiable. So I
Mm.
would not put it on investor. Somebody who says that investor forced me is actually, he's not a right entrepreneur, because finally when the entrepreneur stands up and say this is the way I want to do it, no investor in his mind would tell him not to do it, primarily because investor put money on the guy rather than on the business model, and they think that this guy will I somehow make it. So I think it's a question of, see, they will negotiate, they will push you hard, because the faster you do it, the better it is for them in terms of valuation. It's a question of, and frankly, everybody gets swayed by it. Everybody gets swayed by it, and every entrepreneur will get swayed by what investors are saying, thinking that they know better than them. So it's a question of bringing sanity to yourself to say where to agree and where not to agree. And for first few years, you are on this because you think that the people who know, investors know more than you, and then you realize that no, they don't know more than you about your.
Yes, because you are running that business day in and day out.
Because you may trust that they are doing very well, or they will give you right advice, and then you suddenly realize that they are as ignorant as you are about this, and then the equation becomes right.
Okay, lovely hearing your views on this, Rajat. So, since we are keeping the interviews very short format, so would you like to end this interview with any of the key learnings which you learned very hard way in your journey and you would like to share with fellow entrepreneurs?
So 16 years have been full of failures. So I think what I would say is that entrepreneur is a very ambitious person. He should have one person who's pessimistic and create right kind of projections, which is 50% of entrepreneur's revenue and double of the cost. The second thing that one should do is to also be very sure about compliances. When entrepreneur is running at that point in time, there are certain things that people do unknowingly which can come and hit them hard. So therefore, I think it's very important to have a rope on compliances and create a team which can run all the four processes well. So I would say that have highly ambitious entrepreneur, but a guy who can create, a cushion and keep enough cash, because when you run out of cash, everything goes out. So therefore, keep enough cash every moment of time. Don't run only on hopes and ambition.
Yeah, they say, I mean, that's why the saying is cash is the king. Yeah. Great, great. Thank you so much, Rajat, for your time. And we got to know so much that sometimes there is no strategy to the decision. Sometimes it's just your passion that takes you to certain decisions which are very ambitious, strategically may not be making sense, and then you make your way along the way. Thank you. Thank you so much.
Right.